Hi, this is Wayne Wagner from Visionary Wealth Management. Today we're going to talk about the strategic use of donor-advised funds. Donor-advised funds are vehicles that have become more popular, more in vogue within the financial planning process, and we think there is a real sweet spot for executives who are in that last 5 to 7 years of their career, of their working years, to use donor-advised funds strategically to get maximum tax benefit and fund many of their charitable ambitions and expectations throughout their retirement years. So a couple of questions to start. Number one, is charitable giving a regular part of your lifestyle today? Do you have organizations, nonprofit entities that you give and take a tax deduction on? Number two, when you retire, are you expecting to continue those contributions? Are you expecting that you will continue contributing to nonprofit organizations throughout retirement? If those two things are true, or if you want charitable giving to be a part of your giving during retirement and or at your death, donor-advised funds may be a very powerful tool to use in those last working years of your career. Here's why. In those last 5 to 7 years, you very likely have appreciated stock within your non-retirement portfolio, number one, and number two, you're likely in the highest tax bracket you're going to be in. So the expectation that we all have, and if your financial advisor is doing his or her job, you will be managing down your tax bracket, hopefully, as you move into retirement. So you'll have, for instance, money in IRAs, Roth IRAs, non-retirement accounts, things like Social Security and pensions, and your financial advisor will be working hopefully with your CPA to manage where that income is coming from and get you into a lower tax bracket as you transition into retirement. That means these last 5 to 7 years where you are in your highest earning years with often the largest growth and appreciation going on within your portfolio gives you a very unique opportunity. So let's say that you want to be able to give $20,000 a year. And let's say that in order to fund that, we would need $400,000 or $500,000 in a donor-advised fund to fund that for the rest of your life. So that becomes kind of what part of the strategic conversation, the target of getting $400,000 to $500,000 into a donor-advised fund by the time you retire, so that we can fund that $20,000 or so in contributions to charities of your choice for the rest of your life. Okay, so if that's becomes a strategic goal, the question is, how do we get there? Well, if you are 3 to 5 or 3 to 7 years from retirement, the way we get there is to kind of work backwards. Well, how much do we need to contribute each year? And then what assets are most effective to donate? So for instance, for our clients, what we do is we go through the non-retirement portion of the portfolio and we look for that most highly appreciated stock. So, right now it might be Tesla, which was up 1,000+% over the last year. So we might look to donate a portion of that position into the donor-advised fund in a year where you're in a very high income tax bracket. Why? Because first of all, you're getting a maximum tax bracket reduction in your income tax. So if you have income that's being taxed at above 37%, then you're getting the maximum tax deduction on the income side, and you are avoiding the capital gains taxes on the other side. So let's say you give a $100,000 gift into the donor-advised fund that has a $20,000 cost basis. Well, you are avoiding that $80,000 capital gain hit if you sold that position, number one, and then number two, you're getting that maximum tax bracket income tax deduction. So the combination of those two things could put more than half of the value of that gift back into your pocket through the tax deductions. So in terms of utilizing the tax code to benefit higher income and wealthier clients, this can be a very strategic, very advantageous approach to funding your lifetime charitable ambitions. Here at Visionary Wealth Management, we're always here with perspective for the decisions ahead. If this has been helpful, or if we can help you with some of your strategies around your financial planning, please don't hesitate to reach out. We're always happy to have a no obligation consultation. Take care.